Hello, everyone. This is Martin. It is Saturday, and I'm producing this video for you for this weekend, so that you will get this in plenty of time before Sunday opening trading, which is at 5 p.m. Eastern Standard Time. So we're looking for trading opportunities for the week of April the 25th to the 29th. Okay, and this week, kind of the theme is. The Canadian dollar and the British pound, will they be the strongest currencies this week? Last week they ended up in pretty good strong territory, and I kind of believe that this will continue. Probably some of the best opportunities might be with the US CAD. The US Canadian dollar pair, and also some of the Canadian and British pound cross pairs, especially with the JPY or the Japanese yen. I believe Japanese yen is one of the weaker pairs right now, so there could be some great opportunities in the cross pairs, and we'll talk a little bit about that as well. So let's get started with this video. Okay, the very first pair is the the Euro USD weekly. We always start by looking at the weekly time frames just to see if we can see anything really unusual with the candlesticks. And here you can see last week, well, not last week, well, last week was a bearish pin bar, which is indicating continued weakness in the euro against the USD. But the previous week before that, we had a bearish engulfing candle. So two bearish candles. I kind of think that the downside is going to continue. And so for this week, I'm saying the uptrend is weakening, and we can either look for counter trend trades to the downside on breakouts below the candle wicks, or wait for further evidence to the upside. And even we are in an uptrend. Again, you can see on the MACD on the weekly here, but again, the uptrend is weakening. Okay, so now I'm going to drill down to the daily chart. Okay, just a second there. Okay, this is the daily chart, and you can see we certainly have found weakness. Price is heading toward the 50 SMA. It has broken the 21. So we're basically in a no man's land for trading. I would not take any trades right now. Again, this is the daily chart. You can see the MACD. The histo bars are getting closer to the zero. They are declining or getting shorter. And so basically you're in a wait and see situation. You really don't want to take a trade when the um, uh, the candlesticks are between the 21 and the 50. You want to wait for either a breakout to the downside or a breakout to the upside. So wait and see here, okay? Although I think this currency pair is probably headed down a little bit lower, okay? And finally, we get to the LEOD, and you can see we do have a breakout on the LEOD. So really what you can do is you can take a small trade right now, a small sell trade. We don't have that many pips to go to the resistance. Let's take a look here. Taking my crosshair tool. Okay, well, 35, 40 pips. Right here, you can see, I'm just going to draw this in, is previous support, and this is what you gotta watch out for. So price, there might be a decent trade there, and it looks like since price is broken down below the yellow line, the blue is not quite below the 45 yet, but it is below the yellow sentiment line. So probably the best course of action would be, instead of just a sell right now, let's go down to the you take a sell trade just below the wick of this candle, about 5, 6 pips below that, okay? And let me switch again to the daily. Yeah, so this was a good bearish candle here on the price chart. So yeah, you know what? You could take I would probably feel confident taking a sell trade right now. It's probably going to come down to at least retest here, but then remember we've got previous swing low. Uh, um, uh, down over here and down over here. So it's got a bit to go. It's good for short-term trade on a counter trend. Okay, so that's my opinion on that one. And now we're going to go to the British Pound USD Weekly. Here you can see a huge, huge bullish up candle on the weekly. It looks like the sideways downtrend is weakening. I mean, the histo bars are well below the zero on the weekly here, but it looks like the downtrend is weakening. Looks like price is trying to get higher again, and I believe it will be. I believe at this point in time, you can almost look. Well, before we do that, before we let's drill down to the daily. Okay, so this is what I'm suggesting. If you want to take a buy trade, you want to take a buy trade above this area right here, and you're looking at least above the 144.60, 62, somewhere around there. Um, Probably 144.64. If you want to do that, take a buy stop order, and you've still got lots of room to move at least another 120 pips. So that could be a great trade. On the daily chart, price is above the 50, price is above the 21, and you can see the yellow, the 8 as well. So price is above all that. As well, the histo bars are rising above the zero, indicating strength to the upside, strength to the upside. Okay. And once price clears the 100 moving average, we can go up to here. And if it gets any stronger, perhaps it'll meet all the way up with the 200 at some point in the future. Okay, so now we're going to go to the LEOD. You can see 4 days ago it did cross the above the yellow line here, and again, we're looking at kind of resistance here. So you want to take a buy trade because we're very close to previous resistance. A buy trade just above the 144.64, 144.65, something like that. And there's room for it to move higher. And you can see here the blue line is above the 55 and above the yellow as well. Okay, so now we are going to the Australian USD. The Australian dollar really has been pretty strong over the last 5, 6, 7, 8 weeks. You can see going all the way back to about here. Um, you can see price is above the 50 here with the blue line. Although last week we had a bit of a pin bar. It did end up bullish though, but it is a pin bar with the huge wick up here. You can see that on last week's weekly candle. And what that means is the buyers tried to take price all the way up to this resistance, which is the gray rectangle, and the sellers brought price all the way down. Although the bulls are still winning, the buyers are still in control overall. And you can see the histo bars are well above zero and rising. On a daily chart, okay, you can see because of last week with the pin bar, you can see 1, 2, 3 bearish candles. I think price may come down a wee bit lower to test the 21 moving average, or somewhere right in here. It may come down to the 76. Let me just see what that would be. It may come down all the way to the 76.50 zone, and then you can look for buying evidence to the upside, or just you can also place a buy stop order above the high of this wick right here. So we're still in a buying sentiment, and either wait for price to turn around, like come back down, turn around, and you want to see one good bullish candle to the upside, then take an entry at the open of the next candle, or take a buy trade just above the high here, okay? And on the LEOD, you can see the same thing, price just coming down. So on the LEOD, we would be waiting again for bullish evidence to the upside. In other words, looking for this kind of a pattern. Take a look here to the left, price coming down, 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 and then looking for evidence again in the overall major trend, which is up. Okay, so right now you can see the blue line has come below the yellow line. So again, we're waiting for this pullback to be finished. Um, on a daily chart, let's just drill down here. This is the daily chart. Okay, so on a daily chart, this is what you want to do. You want to draw a trend line. Oh, I'm sorry, this is the 4-hour chart. Sorry, 4-hour. Okay, so once price breaks above here on a 4-hour chart and above here, then we're good to go again for the upside. At least you would be getting at least 50 pips, but you're really waiting. See, you can see the histo bars are below zero. The blue line is it is below 45. So right now you're almost looking for a sell trade to the downside to at least this area right here, the 200 moving average. Now this is the 4-hour chart. Okay, so um, looking for sell trade counter trend. Let me just do this. Okay, I'm joining the valley over here. You see, down up. Okay, joining another valley, down up. Okay, the up is designated with the one white bullish candle, and you can see we have broken to the downside. So this actually is almost taking a sell stop order just below the wick of this black bearish candle. You've got room to move to at least possibly here, so at least 50 pips for a short-term counter trend trade. If it breaks this area, it could come down lower to meet with here. So again, back to the daily chart, you can see we do have room to move to the downside. So this could be great for a counter trend trade right now, or wait for bullish evidence, as I mentioned, to the upside, because we are still in a strong uptrend continuation pattern. Okay, now let's take a look at the New Zealand USD. Okay, here we have a huge bearish pin bar. Okay, you can clearly see that. Let me zoom that in. Okay, this is on the weekly chart. Can you see that? Okay, so huge bullish pin bar, and I'm gonna put that out again. So this, so here it looks like price is going to come down. Though the uptrend is certainly weakening, and I want to drill down to the daily. Okay, so here you can see price still can come down a lot more to at least this area right here, which is previous support. The histobars are getting smaller, so good. This could be good for a counter trend trade, or you just want to wait for bullish evidence to the upside. I mean, price may come down all the way here. There's a confluence. You can see the 100 moving average with this dashed blue line. We got the uptrend line here. We've got the 50 moving average, and we got a support zone here. So looks like price most likely will come down to at least this area, and then you can decide what to do. So here again, it's a wait and see situation. Okay, and on the LEOD, you can see clearly prices come down with 3 huge bullish candles. This is the daily chart. And again, looks like price could certainly come back down to meet up with this trend line. You see, we are in a bullish channel overall, so price is slowly going higher, higher, higher. However, this is a pullback or a retracement. Okay, and so again, it's wait and see to see what happens. Um, what happens if price on the daily chart gets below the yellow line here. I'm just going to go down to the 4-hour. So you can see we did miss the boat on the 4-hour time frame. Again, price broke the lower yellow line. If we would have had, okay, if drawing a trend line, this is valley right here, see, down, up. And with this candle, it broke, and conservative entry would have been right there, and you would have made to date about 76 pips. So that sometime is the strength of the 4-hour chart. You can often look for earlier entries. If you again switch to the daily chart, you can see we haven't crossed the yellow line just yet, but I believe there's room for price to come down a little bit further. Okay, and now we go to the USD CAD weekly. Okay, last week I mentioned you could take a sell trade right away. This last week, downtrend, we were in a downtrend. I mentioned sell right away or wait for a breakout. And if you would have sold, taken a sell trade right away, let's go down to the daily chart. You see, this is the previous week on this red vertical line here. So taking a sell trade right there in the Sunday, Monday opening, you would have made quite a number of pips, and I believe that was around, well, about 70 pips or more. Okay, waiting for the breakout, that never did happen. Um, and let me just okay. So waiting for the breakout, that never did happen. There was no real breakout. Oops, guys, I'm making a mistake here. I was looking at something else while I was talking. So again, selling right away. This is again the US CAD. Last week I did say if you would have sold right away, you would have made a lot of pips, and I was wrong. In case you would have actually made 146 pips, and let me show you exactly what I mean. So last week, placing a sell right away at the Sunday, Monday opening, uh, although it did gap up, okay, but just below the previous candle, you would have made about 100 and I think it was 146 pips or so. Selling the breakout means taking a sell stop or below. You see this large black bearish candle with the white candle right beside it? Selling a breakout just below there would have made you 70 pips. Okay, so that's where I got the information. So breakout 70 pips, selling right away, even though you're gapped the other way. It did gap up starting up here, but did close and fill the gap pretty quickly. And the next day went down all the way and would have given you all that profit. Okay, so the US CAD, you can see here what I've done. We are in a we are in a bearish channel. You can see that's with the top trend line, the bottom trend line here. Looks like price is slowly making its way down, although went sideways right here, went down, made a new lower low here to the previous low, another new lower low to the previous low. So right now we're in a bit of a well, it was in a bit of a pullback, but now it looks like prices again to the downside. And it's almost like a bearish daily candle. So I would be very confident to take another sell trade right now. And I guess that's what I'm saying. You can take a sell trade right now or just wait for a breakout, just like last week. And I want to go back to the price chart. So so take a sell trade right now because this is almost like a bullish or bear. I'm sorry. This black candle is like a bearish engulfing candle, almost engulfs the previous candle right here. And so if you take a sell trade right now, I believe price is still going to keep going down lower, eventually even much lower as the price of oil increases, or just take a you can place a pending sell stop order below the wick of this candle right here. Okay, so those are your two choices. Overall, we're in a downtrend. Okay, a real quick look at oil. This is the daily chart, and you can see again oil went up, broke a resistance area, has came back to test the resistance, which is now new support. We had a bullish candle, a bit of a pin bar, but it's still bullish. And again, I believe the price of oil is most likely going to go still a bit higher. It may even go, it may even go as high as up in this area right here. Okay, so that's what I see over there. Okay, last week I said that the this pair, the U.S. Swiss franc, there was probably a good opportunity for a counter trend trade. You can see Uh, Price did actually go up, up, up. And let me go down to the daily chart. So you can see that right here that just a second here. Okay, so this is the vertical line, the end of the previous week, and I said watch out for a counter trend trade, and yes, it did. So it actually went up all the way. With this candle, you would have gotten in and you would have made about 88 uh, pips or more. Okay, so this was the candle to watch. It ended up closing above the 21. So, um, and you can see the histobars are rising on the daily chart, which means the downtrend is weakening quite a bit. The U.S. is getting stronger against the Swiss franc. How much higher though? You can see price though has ended right now at the blue 50 moving average line and a resistance area. Also take a look, we're almost at the 200. So price might still go up a little bit higher, but again, I would right now wait and see. You want to either take a breakout above the 200, in this case above the dash red line, take a breakout above that, or or just wait for other uptrend evidence, and that means waiting for price to come back down again, then looking for bullish evidence to the upside. Right now, it's a wait and see situation, okay? And on the LEOD, you can see the same thing here. Price actually left the train left the station 3 days ago with this breakout right here. If you would have caught that on the LEOD, you would have made, like I said, about 60, 70 pips or more. Okay. And I right now again because price is right there at the 50, and also look at the previous swing high here to the left. Okay. And also with the 200 coming up, you kind of just want to wait and see, right? Okay. So either you want to place a trade above the 200, like right about there, pending pending buy stop order there, or waiting to see what happens first. The blue line you can see down below with the RSI. The blue RSI is rising above the 55. Also, the sentiment, the yellow line, is rising. So it looks like there's going to be further bullish evidence, but again, you have to be very cautious and just wait and see. Okay, and now we get to the US Japanese yen, and this is a bit of a strange candle right here where we've got one on the weekly chart. You can see one huge bullish engulfing candle, which also kind of just almost right here at the resistance. Okay, so this certainly is a wait and see situation. Okay, I'm taking a look at the daily chart. I switched the U.S. Japanese yen to the daily chart. You can see price is kind of broken slightly above the resistance area, but we are right at the 50 moving average. And because we're right here, I'm just going to say wait. This is a wait and see situation. You may want to, you certainly do not want to open up a trade at the Sunday evening open at 5 p.m. Eastern Standard Time. You really want to wait for this to see what happens on this pair. Let's look at the clues on the weekly. This is the daily chart. The histobars are rising towards zero, which means that the downtrend is weakening. We had a double bottom here, so that obviously played well for a counter trend trade to the upside. But again, we are at the resistance area, and you can either take a pending buy stop order above the 50 SMA, and that means somewhere above the 111.85 area. So above there, 111.85 for a buy stop order, and if everything's fine, then you've got a bit of a ways to go to make at least, let's just have a quick look, about 80, 90, 100 pips or so, okay? Or just wait and see what happens. But again, that's what I would do there. And I'm going to take a quick look at the LEOD. Same thing here. You can see a price did break above the top yellow line, but again, because price is at the 50, you want to wait and see or place a buy stop or right above there somewhere, just as I mentioned on the pr- um, the the other chart. So here you can see there's a major swing up. The slope of the line of the blue line is rising, but again, it's really, really a wait and see situation. See what happens with the Sunday, Monday open. Maybe just waiting for things to die down and then deciding what to do with your order. Now, I'm going to look at some quickly some cross pairs, and I believe the British pound and the Canadian dollar are strengthening the most. Um, the weakest pairs are probably most likely the New Zealand dollar and the Japanese yen. And taking a look at some cross currency pairs may give you some really, really good opportunities. So let's start off with the British pound Australian dollar. This could be great for a counter trend move. I mean, possibly taking a buy stop order above 5, 6, 7 pips above the high of that wick there, and if everything goes well, there's room for um, at least 120, anywhere from 120 to 200 pips to the upside. But we are still in a downtrend. I just want you to be aware of that. I just see that the British pound getting a little bit stronger from here on in until possibly it goes down again. But this could be good for a good counter trend. The next one is the British pound New Zealand. Here you can see again, New Zealand, the British pound is rocketed up with 1, 2, 3 good bullish candles. However, we are again at the 50. So if you want to perhaps place a buy order for counter trend, it would be 6, 7, 8 pips above the high of this wick and above the 50 moving average. If everything looks good, you probably look at that at least to this previous swing high over here. So that's at least 250 pips again to the buy side. So that could be a really good winner for you there. And let's take a look at the British pound, Japanese yen. Again, this one was a huge rocket candle. How many pips was that? Let's take a look. Okay, you can see 782 pips last week alone. This is the weekly chart, okay? However, let's drill down, and so you can see we've cleared the 50 SMA, and price may retrace a bit, and I believe it will retrace, but um, you can look for buying evidence, and if it comes back down a bit, good for at least another 450, 500 pips. Eventually, the British pound, Japanese yen could actually meet with the 100 moving average, which is coming down, and here's the next resistance area right here. Okay, so it's got a long way to go, but again, you want to either look for better buying opportunities on a lower time frame chart, like the 4-hour chart, or place a buy stop order well above here. Or just wait for price to retrace back down closer to 50, and then take a look for buying evidence to the upside. You can see the histobars are becoming smaller and smaller, smaller, which means the downtrend is weakening, and the British pound is gaining strength. Okay, and finally we got two more: the Canadian Japanese yen. Notice that a lot of these cross pairs do include the Japanese yen. So here, the Canadian dollar rocketed up again. This is the weekly chart, so there's room to move. Let's go down to the daily. Uh, I don't think you should take a buy trade right now. I think you should kind of wait for a bit of a retracement and then look for buying evidence to the upside. But it should most likely go higher to meet up with the 200 moving average and the top area of this um, resistance area, which is around the 88 well, the 89 area, about 89, 89.20. So it's still got room. Let me just take the crosshair again. It's got room for at least another 80, 90, 100 pips to the upside. Again, just beware, caution, we're close to the 200 SMA. And then the final one is look at this. This is probably a great sell trading opportunity. Sell trade only. You can take a sell trade right now, but again, beware of the Sunday opening. There could be a gap. I would not take a trade just yet. Wait until things die down after 5 p.m. on Sunday. Take a look what's going on. But this one has a long way to go again. Here's the previous swing low about there. So it's still got room for at least 150, 180 pips to go to the downside and possibly even further. Okay, so this is the Euro CAD daily. Some great cross pairs for you to trade again. I'm thinking that the British pound and the Canadian dollar are stronger, getting stronger, and most likely will continue to strength next week over the next few weeks. The weaker pairs right now, the New Zealand, not pairs, but currencies are the New Zealand dollar, Japanese yen, and that's why trading cross currencies against the Japanese yen probably seems to be a pretty good idea. So, this is my take on this year. The weather's fantastic. I'm still going to go outside and hopefully enjoy some sunshine. I've got some things to do. Take care, everyone. Hey, send me some emails. Send me your screenshots. I did make up a video on how to take screen captures of your charts, so I'll be more than happy to look at them. And happy trading. In the meantime, take care. We'll talk to you again soon. Bye for now.